please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast. Just take a look at what's taking place in the Asian markets. They're moving higher as we speak. Near 230-point gain on the Nikkei, up about 1% at the high point of the day. We have early rates coming in from both Shanghai as well as Hang Seng. Shanghai opened in the red and now moved to the high point of the day, and the Hang Seng itself clocking in gains of about 440 points. Looking good for our markets, the SGX Nifty above Mount 11,000. But let's shift focus then. We've been getting you top voices from Davos, where the World Economic Forum is currently underway. Shireen Bhan caught up with a panel of Sanjay Nair, the CEO of KKR India, Manish Kejriwal, the managing partner of Kedara Capital, and Rajiv Lal of IDFC. Began by asking them what's the key message for foreign investors and what is it that they're looking to pick up on from PM Modi, who's slated to speak later today.
I think the structural reforms, what they've already done, are actually quite a few, and they were the right ones to do in terms of taxation and some of the stuff on the bankruptcy code, which is very commendable. But I think going forward, they need to really figure out what they're going to do with the banks per se, not just a recap, not just
100% FDI in banks, a proposal. We don't know if it'll go through or not. It's been doing the rounds of government for the last few years. It might be back on the table is what we're given to understand. Good idea, bad idea?
I think it's a great idea. I think there's no reason to own any business by the government. And I think Prime Minister Modi has said that.
No, it doesn't mean the government is going to get out.
Yeah, that's okay. But I think they don't have to be morally and sort of financially bound by putting money into the banks. And I think Prime Minister Modi has said again and again, they have no business to be in business. I think that's a big reform. I think they've got to really divest some of the public sectors. The fiscal is becoming a structural issue. So until they resolve that, I think... it's, as I say, India grows by night, and the micro story is pretty strong. I think the macro is good in the context of where we are. So I think we've got another solid couple of years ahead of us, and hopefully things will get better. But I must say that where we are today, things are pretty good. So
Manish, 2018, do you believe that private equity is going to continue to have the great year that it did last year?
Listen, I think last year what really happened was valuations were high. But that allowed a hell of a lot of exits to happen. What was the issue with Indian private equity? We didn't have exits. Last year, with a spate of IPOs and a spate of sales to strategics, we've actually had exits. So I think what's going to happen in 2018 is if the markets continue to be as buoyant as they have been, the spate of exits continues. We ourselves had 3 exits last year. Are
you getting worried about the state of the markets, though? Because everyone's talking about valuations being stretched and so on and so forth, not just in India, but globally as well. And some think that this is a symptom of overconfidence and perhaps that could be the start of a shakeout. Are you in that camp?
No, listen, I think it goes back to earnings. Right now, the stock market has run ahead of itself, not only in India, but globally. Yeah. In India, I think we're seeing the first green shoots. You saw the Unilever results in India. First dramatic improvement. You see GST and demon effects sort of settling down. I think if you keep seeing the effects stabilizing and growth coming and earnings growth coming, I think we'll have a great year ahead. Having said that, the macro and where oil prices are is a bit of concern. But I think at an overall level, what you will see, as I was saying earlier, is a lot more exits, probably people being a little bit more hesitant in making new investments when banks are trading at 4 or 5 times book.
Rajiv Lal, congratulations on the deal with Capital First. And what can we expect now in 2018 to start with? How soon do we expect the procedural issues with this merger, especially in the context of what we saw happen with Shriram Transport, go through this time around? Shareholder concerns on giving the deal a thumbs up?
No, so this deal will take a few months to navigate. We have to go through the regulatory approval first, so that will take 2-3 months, and then the NCLT process and shareholder approval. I obviously believe that it's a very good deal, so I don't think shareholder concerns will be an issue. This is great for all stakeholders concerned. Capital First as well as IDFC Bank. Constructive story, very rapid retailization of the book, improving margins, much greater ability therefore to accelerate the pace of our CASA rollout, which independently of the transaction has been gaining momentum and traction. So quarter on quarter our execution is gaining significant traction. CASA has grown 1,000 crores just in one quarter. I expect that to continue for several quarters. So things are looking constructive and good as far as I'm concerned.
And 2018, you think, will be or continue to be a year of consolidation, especially in the financial services space and the, this NBFC sort of theme that's been playing out? I'm going to get both of you to comment on that as well, but let me start by asking you.
Consolidation, so I don't know. Valuations will be always challenging for acquisitions and consolidation. But yes, the theme of going down the risk curve to a new segment of customers, new to bank, to open banking to them, that I think is a theme that has long legs, with many years to run.
Looking good across Asian markets, and the SGX Nifty is still very much above that 11,000 mark. But let's now focus on the developments we are expecting from Davos today. Prime Minister Narendra Modi is attending the 48th World Economic Forum at Davos. But what else can you expect to hear from the big event in Switzerland? We have Shireen with this report.
I'm told Davos hasn't seen snow like this in almost 2 decades. It certainly hasn't seen an Indian Prime Minister here at the World Economic Forum for almost 2 decades. So it's only fitting that Prime Minister Narendra Modi kickstarts the World Economic Forum's annual summit here with his address at the plenary session. It is going to be an event and a speech that people, global investors, domestic investors are going to be watching out for very, very closely. From what we've heard so far from the government, from the team accompanying the Prime Minister, he is going to reiterate the India story. He is going to talk about how India continues to be open for business, a slew of the reforms that have been undertaken, structural reforms like the goods and services taxes implementation, as well as further liberalization of norms to do with foreign direct investment. It is going to be the development card that the Prime Minister pitches here. Outside of that, we are of course going to see a lot of activity around the India lounges. Maharashtra has set up a lounge. Chief Minister of Andhra Pradesh, Chandrababu Naidu, is here meeting with investors. The Telangana government is here as well. So several states presenting their story to investors in Davos also. We will keep you updated on all of the action. There is going to be plenty of it outside of what's happening with the Indian delegation. It's a very large delegation, a large corporate delegation as well as a large ministerial delegation. But there are plenty of big global voices that you will catch right here on CNBC TV18.
I was Shireen with the update, and of course we'll keep getting you those faces and those voices through the course of the day. Right now it's time to talk commodities. Manisha is joining in with all the action. Good morning, Manisha. What's prime up on your radar today?
Well, plenty. Thank you so much for that, Surbi. Well, the U.S. shutdown has been extended, or rather the Senate has voted to take it through Feb 8th, and you have a couple of weeks more into this. So you have seen the U.S. dollar regain a bit. The equity markets, of course, have hit yet another record high, and you have seen the global growth theme continue to work quite strongly for the industrial commodities. So you have the crude oil prices yet again inching back on the higher side. It also has to do with the statements that you are hearing from the OPEC members that the output cuts will continue through 2019 as well. That is when you will see rebalancing happening. Apart from that, there also has been a rig explosion in Oklahoma, and that seems to be adding premium to prices. The industrial metals, of course, have seen strength come back. You have most of the base metal prices trading at a multi-month highs. The economic data has been positive. You will be watching out for the Bank of Japan policy meeting today. It also is the ECB Bank of England meeting coming in on Wednesday and Thursday. So it is a data-heavy week when it comes to central banks' statements coming in. Apart from that, it also has to do with the deficit and the supply concerns coming in for many of these metals, which is keeping the prices higher today.
All right, Manisha, thanks a lot for that. Let's take a quick handle from the futures and options action. Yesterday in the cash market, well, the FIs bought about 1,600 crores. This is the expiry week. We saw them sell about 1,800 crores in index futures as well. So with that sell figure, the FIs added close to 18,000 shorts, unwound about 3,500 longs in the index futures, and now they're net short. The FII short positioning is at 52%. Versus about 28% what it was at the start of this series. But again, in the index options, optimism continues. Heavy put writing seen. The FI sold about 3,500 crores in index options, added close to 29,000 short put contracts, believing that the downside for our markets absolutely limited. So if you take a look at the active strikes, 10,900, 10,950 puts, both of them saw immense amount of short writing or put writing, and the 10,800 call and 11,000 call writers felt a little jittery. But mind you, The SGX Nifty indicates a start above that 11,000 mark. If that does happen, we are likely to see a lot more short covering given the FIs are net short in index futures. Put call ratio at the elevated levels, maximum open interest at the 11,000 call, and with that the SGX Nifty indicating an 11,000 start at the 11,000 mark.